Okay, guys, let's go over a quick video. Let's look at yesterday's price action. What I want to do in this video is look at the opening range, the New York opening range that opens up at 9:30 Eastern Standard Time, and how we can use it with the system. We've had some great volatility due to the interest rate concerns. They came out in November and said they were not going to lower interest rates at the December 10 Fed meeting. And now they just hinted this week that they are going to possibly hint at reducing 25 basis points. So it's creating a lot of volatility, which is great for the system because we need volatility as position traders or day traders in stocks, crypto futures. This is the S&P futures and so on. So let's take a look at the 5-minute New York opening range, and I'm going to show you how to do a fair value gap. I'm going to show you how you can look at these setups when they come up. So the first 5 minutes after the first opening range of the first 5 minutes, what you can do is for the New York Open, here's the New York Open at 9:30. There's the low and there's the high on the first 5 minutes. And you can mark up the first 5 minutes low, first 5 minute high. And I have it in a blue line as far as that goes. And what we can do is we can look for setups in the direction of that overall push. So we only have two setups in the trade room that we look for. We look for a yellow trigger entry that automatically fires. The algorithm automatically fires when it's qualified. And then we look for a possible 25 liquidity grab buy or sell zone. So you can see that the opening range, we open lower and then we start moving back up. And what I did is I did this live in the room. I shipped this fair value gap up here. I kept putting fair value gaps. I'll show you how to do. It went right to the fair value gap and closed outside the opening range. This is the big setup for us yesterday. My fair value gap off of a blank chart. I put this up in the room and I started drawing fair value gaps, but we never got a reversal to close outside of one. I mean, touch it and then reverse it to qualify it. So a fair value gap, this is where liquidity grabs happen. It went right to it, touched it almost to the tick that I drew up before it came to it. In fact, this fair value gap was up here for about 20 minutes. So I knew this fair value gap all the way back here at this level. I'll show you how I found out that should be where it should stop. Price went right to it, stopped it. We got the nice reversal candle outside of the 5 minute opening range, and the market just got taken to the downside pretty quickly. 67.10 as low as 66.89. So that was a nice trade to start the old morning off on that setup on that liquidity grab. So then it started floating, started messing with the opening range, and then it broke out at this level, the 5 minute opening range. We broke out. There's your entry level. There's your yellow trigger entry level. This was a confluence trade. The reason this is so nice is you're inside of our trend filter. Remember, if it's green, we're looking for liquidity grab buys inside these zones. That's what the market likes to reverse. This was a confluence level also. You can see it's inside of the zone and also a 25 buy zone. What the market likes to do, it's always trying to find liquidity. It likes to come inside these zones if it's green and reverse, inside the zones reverse. And this works on all markets right across the board. But you notice it broke out of the 5 minute opening range, and that gave it energy, and that gave that energy. And this is not a small move. This is at 67.38 on the first push, all the way up to 74. So really nice 48.58, 68, 30 point move, potential to the upside. And that was, you look for the yellow trigger entry and so on. So the great thing about using fair value gaps to find levels, when you look for levels like this and how it can pick up a level like this, so on, you can use a 1 minute or 15-minute chart after the New York Open, and you can look at where this market can reverse. We had a buy signal right here at 145 on our algo, and that's where the fair value gap was. And I'm going to show you how to do this. So what a fair value gap is, so this is the 15-minute opening range. So when you're using opening range off the New York Open, you can find what the energy is pretty much for the day using the opening range. Now, a lot of traders that don't understand the opening range, they will think this is a breakout at this level just because it closed on the 15-minute chart outside the opening range. That is not true. This is not true because you can have false breakouts. A lot of traders will also think that haven't traded the market very long. They will think this is a breakout on the opening range also on a 15-minute chart. Wicks do not count on a breakout when you break out of the 5-minute opening range, or it doesn't count if you break out of the 15-minute opening range. So what counts is a candle close outside of the range, and then right when you get a candle outside the close of the range, that's when I'm stalking a fair value gap. What a fair value gap is, it's a distortion in price, or what's called a displacement in price. So what a displacement in price is you're getting big gaps in the market in between candles, and that's going to cause a displacement. When that displacement occurs, the professionals, what they like to do is bring it up and then catch the rolling position traders, bring it right down into the fair value gap and continue it up. So I drew this in before it even happened. I drew this in right here at 12:30 p.m. and the fair value gap happened at 2:45. So you had a couple of hour heads up, knowing if that came down to the fair value gap, it caught the rolling position traders, and you got a continuation. You do the same thing off the 1-minute chart also. What I'll do is I'll look at the 5-minute chart, and I'll find the 5-minute opening range, the first 5 minutes, 9:30 to 9:35, and then I'll break it down into a 1-minute chart, and I'll see where these gaps are. Now, you don't want to look for a fair value gap until you actually break out of the opening range. So you'll want to break out of the first 5-minute opening range, 9:30, 9:35, and then I also put up the 15-minute range. A lot of traders like to use the first 30-minute opening range. That's been the standard the last 30, 40 years. But I prefer energy right from the beginning, right at 9:30, 9:35. It gives you, I like how my algorithm fires a lot of yellow triggers and a lot of 25 and buy sell zones in the direction of the opening range. And it gives you a clear plan because hey, if I break out the opening range to the upside or downside and I get inside my 25 buy zone or sell zone, or if I get a yellow trigger that fires entry, then I know that that's the one I want to try to concentrate on. So yesterday it did the same thing. We closed outside of the opening range right here. But look, once we close outside of the opening range, there's no fair value gap. There's no gap in between the 3-candle sequence. Then it finally gave a 3-candle sequence on a breakout. So here's the original breakout at 10:45. But look between the 3-candle sequence. Okay, 1, 2, 3. There's no gap between the wicks, because when you look for a fair value gap, is that you're looking at the wicks also. And then there's 3-candle sequence, 1, 2, 3. This candle overlapped. You don't want the middle candle to overlap between a 3-candle sequence because this candle overlapped inside of that wick. But look what happened. Here's the high of this candle. There's your middle candle, but there is a low of this candle. So here's a 3-candle sequence, and there's a gap between these candles. So there's a gap and a gap that caused a fair value gap. And what we want to do is we want to draw that in. So that's good for the whole entire session on a 15-minute chart. So that will be a level that I want to look for. What? I want to look for my green trend filter. My trend filter to be green, and I want to look for a retracement at that level, and we want to look to buy the market at that level. So we did get a green, we get a trigger entry at that level. This is a 25 buy zone. It came right down to it. So if I look at 1445 and I come in and I see where the market, when I see when the market came up, there's a fair value gap. Check this out. Look how neat this is. Knowledge is power in the market. You got to understand price action. The 25 buy zone at the fair value gap. So there's my fair value gap that I drew in, this little green box. That's a fair value gap that I drew in 2 hours before. So we knew this fair value gap 2 hours before off the 15-minute chart. So now all I got to do is I got to get down to a 25 buy zone, or I got to get a yellow trigger entry. It came right down to my 25 buy zone. You can see my little dashes. That's our proprietary liquidity grab zone. It came right inside of it. It never closed below it, and it closed right above it. There's your entry inside of a fair value gap. So I used the 15-minute chart to find the fair value gap for the entire trading session, And consequently, you can use our charts. You can use our algorithm to find the entry. And this was not a small trade. This trade was 65 3/4, potential all the way to 93. Then I got Confluence right here. Confluence last night. That is a trade from 87.5 and as high as 11. So you can see you had some really good setups in the afternoon. You had your 5-minute opening range breakout, entry. It came down, try to enter here. It's a small one, 71 1/4, as high as 75. So 16, almost 17 ticks. Runner got stopped out. And then it came right down to my fair value gap. So this one hit the fair value gap first. So this is the first fair value gap play, and it wanted deeper. So it went deeper. Still got 16 ticks. Runner got stopped out. And so you had 1, 2, 3, 4 trades in the afternoon, or 5 total for the whole trading session in the afternoon. It was 5 for 5 in the afternoon using my yellow trigger entry with the parameters I set up. Now, what I did with this volatility, like I said, these are for you traders that have the algorithm. This is a 62.38 zone with a 110 Uni Rinko trend filter. 62.38 zone with a 110 trend filter. Look how smooth this is. Good entry, good entry, good entry, good entry, good entry. Now what we're doing, we'll look for today. We'll come into today's trading session and see what we can do also. So at 9:30, what I'm going to do is I'm going to follow the fair value gap and I'm going to put the opening range right away in the first 5 minutes of trading, and I'm going to try to find a breakout like this. I'm going to put the fair value gap up that gave me a 2-hour heads up and try to find a trade like this again today. All right, but that's how you use the opening range with our algorithm, because we're using the big picture. We're using the big picture on, this is strictly price action. Knowledge is power in the markets. If you understand how to draw these up, then you understand where the algorithm, you can cherry pick trades where the algorithm should have a nice possible runner. And there's the fair value gap right there off a 15-minute chart. I'll do the same thing today. I'll try to find energy in the market. I have no energy right now. You can see in the 15-minute chart, and it's not the New York Open anyway, but see, this wick to this wick is not a big fair value gap. There's no fair value gaps here. The middle candles are overlapping. Okay, so if you look at a fair value gap, you want to make sure that that we are looking at this would be a fair value gap here this morning. So I'm going to put this out on the 15-minute chart. You can see it, the market's responding to it right now. So there's your big gap in sequence in the market. See, that's a wick. That's your big candle. There's your big gap. You can see the market bounced off of it here this morning at 8:45. So that's going to be our fair value gap level, which I'll put on our charts. 96 3/4 to 92.5. 96 3/4, 92.5. So that's what it's going to be dealing with here this morning. 96 3/4, 92.5. 96 3/4. 92.5. 96 3/4. All right, so that's going to be the fair value gap right here for this morning. So we're looking for trades off that level. For the entire session, but all the way to 4 o'clock tonight. And that's as easy as it becomes. 96 3/4, 92.5. And I'll put the opening range up also. Now, if I see another fair value gap on the 15-minute, which you can see it's ticking right now. That's how I called that low yesterday, 2 hours before it came. Remember, I drew this up 2 hours before it came. I saw the big distortion in price. It broke out at 15-minute opening range. Big distortion in price. I put this all the way to the close. It came right down to it, stopped almost to the tick on the fair value gap. That's exactly when I was in my 25 buy zone, and the market shot out like a rocket, 64 all the way up to 02. Went up almost 35 points. So we'll see if we get the same reaction. You see it's getting a reaction right now in this first retracement, but what we want to see is a displacement in price, which we're seeing. This will be now support. So if it ever breaks the low of this level, Now watch, if we ever break the low of this level, that'll be called an inverted fair value gap. We'll look for the market to come down, break, retest the gap, and then we'll look for a sell signal on my algorithm. We'll look for some yellow trigger entries and some 25 sell zones if it ever breaks this level. So I put that up in the trade room. That's what we'll do here this morning. I'll wait till 9:30. I'll put up the 5-minute opening range, and then I'll put up the 15-minute opening range also. So, okay, that'll do it.